What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. It is the 28th day of May, and here we are sitting at about $73.4 thousand with roughly 11 hours left in the day. Hit that like button, subscribe. Thank you all for being here, and let's get into it. Okay, so here we are, dropping over the past 3 days at a rather fast pace. I've been looking at X.com to try to see what the news is to back up the reason for this drop. I mean, overall the charts told us that this drop was coming, but the news has yet to give us a reason. So I'm sure we'll figure that out once it's at the low point, right? We always get the negative news at the lows, the positive news at the highs. Maybe not always, but it works out like that a good bit of the time. Anyways, looking like we are dropping down. The idea has been since since we got back below 80K, the idea has been that we would make a move down to this 71.3 to 70K area, at least somewhere down there. And this would probably be really quick. It is going to be a methodical drop overall. You know, there will be some ups and downs, moments of staging like we just had over the past week. We're not expecting a drop that's like this by any means, but something that will take us around 70K, if not below there. It is quite possible that we also go to 74K. The golden ratio, or sorry, 64K, 66K even, somewhere in that area, low to high. The golden ratio here is at 71.3 to $70,000, but the golden ratio here from the overall low to the overall high of this range is down at about 67.8 to $66,000, and we could drop lower. We could. 64K is at the 786. We've shown a lot of respect on the 786 throughout this range, so just stuff to think about there. If we're looking at this from the perspective of this low to this high here and going off of the Fibonacci extensions, here we found support off the 1414. We could come up a little bit. I doubt from here, if we are to bounce, I doubt we get above 76K. We could find resistance here just below 76K. Anywhere else that's just below it here will form a lower high and likely move lower than that. 72K at the 1618, 71,000, 70,500, something in here. Something like that is probably our next destination. I wouldn't be surprised. If we do keep moving down in a straight line, this would certainly be our area to find support. But if we can meander a little bit, I would think we stand more chance to find support at 72K. But anyways, lower. However you cut it, lower. Whether we bounce here, lower. Whether we go lower from here, lower. And if you are treating this as an inverse or as a head and shoulders pattern, which I don't know if it is. If it is, it's probably a little bit slanted, right? And I think that's okay. If it is slanted, you take the low to the high of the pattern, you put it at the break point, which would more or less be here. That should take us down to 67K, which again is right around our golden ratio retracement of this overall low to high here. Not a whole lot of volume for the breakout so far. We'll see how it goes. Let's get in the short-term stuff, and then we'll zoom back out, all right? Looking at the short-term on the 1 hour time frame, we are moving down here, a lot of volume coming in. Moving down here, a lot of volume coming in. As we're breaking out here, a lot of volume coming in. Seeing a little bit of a bounce here, what you might call a dead cat bounce or just standard volatility, whatever it is. I would assume that we do push lower. We could push a little bit higher first. I mean, looking at this 1 hour candle, it looks like you want to push higher, but the price action has been deceitful. We had a candle like this right here, right before we dropped. We had a candle like that right there, right before we dropped. And maybe not the next hour did we drop, but over the next 4 hours, we did see a little bit of a downturn. Looking at this with the indicators, the RSI does look like it's in a downtrend. We've got lower lows here, lower highs here. I would expect that we get back into this oversold zone, we form some bullish divergence, and then perhaps from there, that's when we start to move up. The stochastics are coming up, and that's nice, but they don't look too healthy. They don't look too strong. The stochastics do look a little bit weak. MACD is certainly bearish. Every time we've crossed green here, it's been a false cross. Will this be any different? Maybe. Third time's the charm. I'm still not too eager to be bullish at these levels here. I'm sure a lot of people are. I'm sure there's a lot of people who are eager to be bullish here. Let's look at the 1 day liquidation levels. There's about $1.2 billion in longs already from these levels. We look at the past 30 days. We've decimated the longs. There are a ton of shorts to clear through. We cleared through these shorts. You know, that first little wall would take us above 75K. Again, I said I doubt we get above 76K, and I really do mean that. I know that there's a bunch of shorts that get cleared out all the way up as high as 84K. Just because they're here doesn't mean that we're going to clear them out. Remember, you guys, oddly enough, at the all-time highs, we actually had like 20-something billion dollars in shorts, and we still dropped. So, and there was like 5 billion in longs. We still dropped. So this is not always the most helpful indicator. In the short term, it can be, but for macro turning events, I don't know if it's as useful. 1 hour time frame, MACD, RSI, stochastics, all in shambles. We're looking at the 4 hour time frame here. Now the 4 hour RSI is very low, right? Now from here, we could see a little bit of support. You've got this lower low kind of coming into play. Wouldn't be surprising to find a little bit of support here, but if we go up to the oversold zone here, might just come back down and form some bullish divergence again there. If we're looking at this on the stochastics, oversold. You've been oversold for quite some time, but you could stay oversold a little bit longer. Here we were oversold for quite some time, and we still dropped lower before coming back up, staging our overall area here, and then dropping down lower. Okay, so just because we're here doesn't mean that we have to move up to any significant degree. Get it out of your heads. As I've been saying for quite some time now, we are not in a bull market. We are in a bear market. We will go lower, and we will likely go below this low. This low, all the people, notice how quickly the sentiment changes, right? Down here, everybody, and even here, everybody was saying, we're going to go below 40K. We're going to go below 50K. Here it comes. Here's the next leg. I was saying we were going to move sideways for months. I thought that this would be part of that sideways, but the overall assumption was that the highest, and you can go back and look in the beginning of February, the highest price that I was calling for was something right around here. We did go a little bit above there. That got us excited for maybe some higher prices when we were at the high points, but once we got back below 80K, we've been bearish ever since. And the idea since here, is that no matter how high we go, we are going to go back below 60K. And I think a lot of people were on board with going below 60K back here. But then all throughout this past month, everybody's been declaring that this was the low, the bear market is over, we're going to 100 and something K right now, it's going to happen, and this is just another bear market consolidation phase. That's all it is. It's a bear market rally, if you want to call it that. A bull market rally. One more time, guys. We're going to do this again because I've done this a few times over the past month. Bear market rally, right? You see it. You see it here. In fact, let's do it like this. Info line. From the low to the high. The degree, the angle is 44.5. Took 38 bars. 44.5 degrees. Okay. Bull market rally from the low to the high. Took 45 bars, roughly the same amount of time, about a week more. The angle's 54 degrees, a lot higher of a pitch. Bull market rally, ready? Here's what a bull market rally looks like. There's your bull market rally, 57 degrees. Right? Bull market rally there, 66 degrees. Oh, look at this. This is a bull market rally right here. Low to high, 73 degrees. If you want to take it to the overall high, still 60 degrees, way more than what we're seeing here. Even in the consolidation phase, from a low to a high, 60 degrees, 44 degrees. Slow. I mean, I'm using this. Don't pay attention to the degrees. It's not like every time you look at it, and depending on how you have it zoomed in or zoomed out, the angle changes, okay? It changes. But the main point that I'm trying to make here is when you're in a bear market, your recovery rallies are bear market-like. When you're in a bull market, your recovery phases are bull market-like. Do you understand? So the lack of volume, lack of momentum, all that stuff should have told us, and it did tell us, and I've made that argument over, I don't even know, more than a month for now, that we would go lower. So that's where we are. Looking at this on the daily time frame with our indicators here, the RSI is getting to the oversold zone. This is a good area to bounce from. We've bounced from it several times before. Bounced from it here right before going lower. When we bounced from it back here, we were in a staging area kind of moving sideways, and then not but like a week later, not even, we saw some pretty tremendous stuff to the downside. The MACD is starting to cross below the 0. That's bearish. The stochastics are oversold. That's bearish. We're in an overall incredibly bearish environment right now with no real signs that it's going to stop. We're at the 0.5 here. Cool. From a low to a high overall. We're at the 382. Cool. Maybe from here we move back up just below 76K. Maybe. Technically here you could move up to just below 77K, but I doubt we get back above 76K. Maybe. But nonetheless, I don't care what happens over the coming days, over the coming weeks, we are going lower to the tune of something around 70K or likely below that. Hit that like button, subscribe. Thank you all for being here. I thoroughly believe that we are going to see prices below this low here. But once everybody's bearish, once everybody starts saying that, instead of everybody saying, we're in a bull market, we're going to go above 100K, the low is in. Once everybody starts to say, oh my God, we are in a bear market, we're going to go below this low. Whenever that becomes the rhetoric, that might be whenever we start to break out again. We break out of this like momentary trend. I don't expect this to be one fell swoop like we had it over here. I expect it to be more methodical, more heart-wrenching, and then as we get into the later months of this year, somewhere around July, August, September, that's when we should be below this price here. That's my expectation. That's what it's been for quite some time now. Hit that like button, subscribe, take care, bye-bye.